Well, is the housing market bubble back? Or is this just a brief pause before a second surge in home prices? According to Zillow data, 18 of the 33 top metros in the US are now down year over year in home prices. Inventory is spiking all over the country, including right here in Columbus, Ohio, where, are you ready for this? We're up 56% in homes for sale versus last year, according to the data I just reviewed yesterday. So you've got inventory rising, demand is definitely dropping, no doubt about that. We got cities like Austin, Tampa, San Diego, they're leading the drop. But the National Association of Realtors chief economist says not so fast, because he thinks home prices are actually going to rise. That's right, rise 3% in the second half of 2025. So we've got two articles we're going to review this evening. The first one is from Wolf Street. And if you've read anything from Wolf Street, you would know that this guy wants a housing market crash really bad. In fact, I think he wants everything to crash, every financial market to crash. I think he was actually in Fight Club, if I'm not mistaken. Like, he wants it all to implode. And then on the other side, we're going to look at an article from the NAR chief economist that says, hey, home prices are not going to crash. Mortgage rates are going to fall and demand is going to pick up. So that's what we're reviewing. Two sides of the coin. I thought these were, pretty opposite sides of the spectrum. And I wanted to get your take on what you think is going on in the housing market, given this data we'll look at tonight. So let's jump into the Wolf Street article first, because again, this is like completely, I don't know. Well, I'll leave it up to you to tell me what you think. And let me go to this. This is a chart they put out. Basically, what you're going to see from Wolf Street is that, and this is some interesting info, because he's going to go back in this article all the way to actually the GFC. And even though this chart's not showing it, let me bring up some information here. He goes back in this article all the way to the GFC to show you what happened in the first housing bubble. And then he kind of compares it to what he's saying is the second housing bubble. Now, if you're new to my channel, welcome. Good evening. My name is Jason Ferrier. I'm a realtor and investor. I've been doing it for 7.5 years in Central Ohio. And yeah, welcome. I'm glad you're joining us tonight on the Housing Nerd channel. If you're looking for the no BS guide to the crazy housing market, you came to the right spot. My job's to give you the data you need to make a more informed decision in the housing market. I'm not going to tell you to buy a house. I'm not going to tell you you shouldn't buy a house, and the market has never been so toxic, so run away. I'm just going to give you the data you need. So here we go with some data. And by the way, drop your questions in the comments below. I'll get to them, what you think of the housing market, any questions. It's kind of a overall discussion this evening on the housing market. But this is the article, and it's linked in my description below. This is from Wolf Street. And the title is amazing. Look at this title. The most splendid housing market bubbles in America. April 2025. The price drops and gains in 33 of the largest housing markets. Again, you should read, I don't know if you know his website or not, but you should read through it, because it's almost like the complete opposite of all the crazy cheerleading you would see for most realtors out there, right? Like, the housing market's never going to drop. In his opinion, the housing market's always dropping, even when it's rising. National year-over-year price gains shrink to 0.7%. Now 18 of the 33 metros have year-over-year price drops. San Diego, Austin, Tampa, Miami, San Francisco, San Antonio, Dallas, Phoenix, Orlando, Atlanta, Denver, Raleigh, Houston, Birmingham, Charlotte, year-over-year gains shrink. In Los Angeles, Boston, Chicago, New York, Philadelphia, and Columbus, Ohio. So you're going to see in a second that prices actually dropped in 18 metros. And then there were other metros where home prices are actually, the gains are falling. Like in Columbus here, we're barely above last year as far as year over year gains. And like I said, in Columbus, not Cincinnati or Cleveland, but in Columbus, inventory has absolutely skyrocketed. Like again, according to realtor.com data, we're up like 50 some percent year over year. Insane. All right. So they say this spring selling season, when home prices in many markets rise sharply after declining during the winter, and they did so a year ago and 2 years ago. But in April, prices of single family, mid-tier houses, condos, and co-ops across the U.S. rose only 0.65% from the prior month, much less than in April 2024, when they rose 1.15%, and in April 2023, where they rose 1.34%, and in March, they rose only 0.21% from the prior month, much less than the March in 2024, where it was up 1.14, and in March of 2024, where it was up 0.75. A similar pattern played out in February. So if you look at the year-over-year price gains, according to Zillow data, you're going to see, and month-over-month gains, you're going to see clear as day that the growth of home prices is shrinking rapidly, nearing basically zero. And then there's a decline, right? And a lot of economists, including Zillow and Redfin, think, home prices are actually going to fall. They're actually going to fall this year, year over year. I'd like to know from you what you think. Will home prices fall year over year, or will they rise by the end of this year? Inquiring minds want to know. Let us know in the comments. And by the way, if you're joining us right now, thanks. Please give a thumbs up to like this video. It'll spread the word, get more people involved, and it doesn't cost you anything. It only takes a second. Don't be a freeloader. Hit the thumbs up. This much smaller month-to-month price increase in April caused the year-over-year price gain in homes across the U.S. to get whittled down to just 0.65%, continuing the trend of lower year-over-year gains. In 18 of our 33 large and expensive housing markets, prices are already down year over year, and a bunch of them are in fairly steep declines from their respective peaks. Even in San Diego, prices declined year over year as active listings ballooned by 70% year over year, while demand has plunged. 70% in San Diego as far as listings, year over year growth. 70%, not 7, not 17, 70. So here's their chart that I showed you at the beginning. Basically, the year over year, the price change from a year ago. If you go back to 2015, this measures the gain of home prices. Now look at this. Look back in 2021. 18%. 18%. I can tell you, folks, there's some areas of Ohio where I've examined the data very closely, and we saw gains in some counties of 30% in 1 year. 30%. So comment below and tell me, how much did home prices go up where you live? You may be surprised on how much they went up, or maybe they didn't go up as much as this, but 18% was the peak back in looks like, what's that, April, maybe June 2021. That's crazy, 18%. Then it dipped. We had that big drop in 2022. And then they did some quantitative easing. Obviously, prices then spiked again, right? They didn't go as high. So the weird thing is that, we actually had our peak years ago, 2 years ago, 3 years ago was our peak in a lot of markets. So prices have been falling in a way in many markets from the peak. And he's calling this the housing bubble too. And you could see like the growth dropped all the way. Actually, in 2023, we had a moment where prices went negative year over year growth, but then it went way back up, or way up, not way back up, but it went up and then down, all the way down to where we are now, just under 1%. By the way, I'll get to comments here in a minute. I'll just continue with the article and then we'll get to it. The growing list of down year over year cities. Similar scenarios played out in 33 metropolitan areas. Month-to-month gains in April, if any, were smaller than a year earlier. And the group here whose prices declined year over year expanded in April to 18, from 14 in March and from 7 in February. So the number of markets that are down year over year, month over month and year over year, that's expanding. Those markets are, the number of areas that are dropping in home price growth is expanding. No doubt. So where did they drop in April the most? Austin, 5.1. Tampa, 5%. These are all down. San Antonio, down 3.2. Dallas, down 3. Phoenix, down 2.8. Orlando, down 2.7. Atlanta, down 2.3. Miami, down 2.3. Denver, down 1.8. Honolulu, down 1.6. Raleigh, down 1.4. Houston, down 1.4. San Francisco, down 1.2. San Diego, down 0.9. Charlotte, down 0.6. Sacramento, down 0.6. Birmingham, Alabama, down 0.3. And Portland, Oregon, down 0.1. Now they talk about down from the peak. Prices in 19 of our 33 metros are down from their 2022 peaks, led by the metros of Austin, down 22.8. So is that a crash? Has Austin officially crashed? Has it? I mean, down over 20%. To me, if you're down over 20%, that's a crash. I mean, it is, right? Well, there's really no official definition, but I'm curious, what's your definition of a crash? But mine's, down 20%. I think that's a crash. Phoenix down 10%. San Francisco down 9%. San Antonio down 9%. Denver down 7%. Dallas down 6%. Call it 7%. Sacramento down 6.5%. Tampa down 6.2%. So a lot of metros peaked in 2022, and then they've been dropping ever since. I'll bet they've been going up and down, right? It's not straight down. But, I mean, when you're looking at just like a shorter graph, a shorter timeline, especially like on Redfin, you can't see that down from peak. Very hard to see in the data. But when you look at this, you're like, wow, we're down, quite a bit in a lot of cities. All data here is from the raw, not seasonally adjusted mid-tier Zillow Home Value Index. The Zillow Home Value Index is based on millions of data points. This is really interesting. Pay attention to this. The Zillow Value Home Index is based on millions of data points in Zillow's database of all homes, including from public records, tax data, MLS brokerages, local realtors association, real estate agents, and households across the U.S. It includes pricing data for off-market deals and for sale by owner deals. Zillow's database of all homes also has sales pairs data. I don't know what that means, but I do know that it's kind of encouraging and interesting that that includes for sale by owner, not just, what they get off the MLS. Now they talk about the 33 most splendid housing bubbles. Kind of a funny time. I think the title was hilarious. Here we track the prices of single-family houses, condos, and co-ops in 33 large MSAs, metropolitan statistical areas. To qualify for this list, the MSA must be one of the largest by population and must have had a Zillow home value of at least 300 grand somewhere along the line. The metros of New Orleans, Oklahoma City, Tulsa, Cincinnati, Pittsburgh, while large enough, don't qualify in terms of their ZHVI or Zillow Home Value Index, which has never reached 300 grand, despite the massive surge of home prices in recent years from low levels. Note that supply of existing homes for sale in the U.S. jumped to the highest since 2016, with active listings exploding in Florida's major markets. In California major markets, active listings have also ballooned by 70% in San Diego. The San Francisco Bay Area reached the highest level in many years. Many metros, like Sunbelt, out west, we're seeing large growth of inventory of homes for sale. It's actually higher than 2019, pre-pandemic levels. Some are at 9-year highs. You should check out a video I did. Was it yesterday I did? Today's Tuesday. Yeah, I did a video yesterday, a live, where I looked at specific metros and the inventory levels, and many are at 9-year highs of inventory. 9-year highs. I mean, you have to have inventory, a lot of it, to cause price disruption. You've got to have a ton of it to cause any type of pricing crash. A ton of it. Got no inventory, got no crash. So now they jump into 19 metros that are down from their all-time highs in 2022. So Austin MSA from June 2022 peak down 22.8%. Month over month, they're actually up 0.5%. Year over year, down 5.1%. Since 2000, look at this. This is a pretty cool stat to put up here. Up 155%. You ain't seen nothing yet. So that's up 155%. We'll get to some other juicy ones in a minute. The year-over-year decline has worsened for months. Prices are back where they've been in April of 2021. They're talking about Austin. The Austin MSA includes the counties of Travis, Williamson, Hayes, Caldwell, and Bastrop. Markets in Texas didn't have much of a housing bubble. Really interesting info. In 2002 to 2006. And then didn't have much of a housing bust either after 2006. They'd been through a huge bubble and bust in the 1980s, and it seems lessons were learned. And by 2015, those lessons were forgotten. So look at this. I mean, look at how, again, as a housing nerd, no surprise, I think this is like really fascinating data. Look at 2006. You can see like home prices basically like didn't really have a bubble then. And then they came back down a little bit, like they spiked right over 200 grand in Austin. And then they dropped right below 200 grand during the GFC. So that not much of a bubble. But now he's saying, look at this bubble now. Look how big it is. Pretty interesting. So we're going to look at some other markets here right now. We're going to go to Phoenix next. But let me just take some comments. What's up, Ghost? Good day, housing nerd. Good day to you too. Ghost with the most. My tent has appreciated 18% since March. That's not bad. That's not bad at all. Pretty good. Are you going to flip it? You going to rent it out? Is it a yurt? Let's go, Zach. 911. How you doing, man? Inventory skyrocketing. There ain't no buyers. Krasimir. Did I say that right? Hopefully I did. Krasimir. I think I did. Yeah. Inventory is skyrocketing in many areas. In New Jersey, greater New York area, everything is selling. Some over asking. Yeah. New Jersey, like, notice the metro's not on his list. And so if this article was written by Redfin or Realtor.com or even Zillow probably, it would be like, hey, in the Northeast, everything's tight, everything's selling over asking, just like JR's saying. But Wolf Street's not really paying attention to those Northeast markets because they're kind of more of a housing bear, I guess, which is just refreshing, you know, sometimes to look at. But yeah, New York, the new Northeast area, even the Midwest, like here in Columbus, things are still selling relatively quickly in Ohio, if they're priced correctly and they are, you know, in good shape. But in the Northeast, I'm guessing everything is selling. Needs to be slashed 50% to even be affordable. That's a big drop. 50% is a big drop. Average in the GFC was like 23. So it's going to take a big drop. How many vacancies after mass deportation? Not sure. Not sure. But we can watch the rates or the vacancy rates. I sublease my shed to a new tenant. Not a bad idea. Not a bad idea. Scamming scumbag realtors said that this wouldn't happen, especially the naysayers on YouTube. Ignore the crash bros, they said. Marry the house, date the rate. They barked parasites. Yeah, I mean, I'm sure there are realtors out there saying that, that it wouldn't happen. I haven't been on YouTube that long, but I haven't said that. But I know you're not talking about me, but I mean, I'm a realtor and I would never say marry the house and date the rate. That's the dumbest line ever uttered on the face of the planet when it comes to housing, the housing market. It's just horrible to say. I mean, the concept in itself makes sense. Like if you can refi and it makes sense, sure, refi and get a lower rate. But I mean, goodness gracious, you don't know what's going to happen to interest rates. People are getting creamed right now because they thought rates would come down and they haven't. Trust me, I won't go into details personally on it. I don't want to divulge any confidentiality agreements, but suffice to say, I can clearly tell you as an investor, you can get whacked if you bank on interest rates coming down and you're just going to marry the house and date the rate, or marry the apartment complex and date the rate. You can get whacked. Trust me. It's 24%. What's that mean? 24%. I don't know what that means. Central Illinois market is hot as well. I bet it is. Chicago's rough. So the Chicago market's really rough. And I'm not surprised Central isn't either. Midwest is tough. House prices are still affordable here. I mean, they are. Even if it's not for the locals, they are for, nationally. What is SLC Utah looking like and predicted to be? We'll get to that in a minute. I think they're on the list. Interest rates are going up. They very well could. They very well could. Higher for longer, right? Okay, thanks for your comments. I'll get to more. Keep commenting. I like your info and your banter. It's good. All right, Phoenix. Let's look at Phoenix real quick. The year-over-year price decline worsened from 2.5 in March to down 1.6 in February. Prices are back to where they'd first been in January of 2022. From peak, down 10%. So if you bought like in December 2022, you're going to be down 10% basically. Month over month, they're up 0.3, okay, but down 2.8% year over year. So look at this. Look at that. Wow, 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 wow. Since 2000, the year 2000, home prices in Phoenix are up 217%. And the crazy thing is, here's the crazy part, folks. That includes the GFC in Phoenix. So even with the dip we had in Phoenix, you still have insane growth. Look at this. So here's the first housing bubble in Phoenix, they're saying. I mean, it went way up, right? Well, not really. Like, and they don't go back to the year 2000, which is odd why they wouldn't do that. But 325 grand maybe. And then it dropped all the way to $150,000. I don't know if it goes under that and it's not showing it on the chart, but imagine that you could buy a house in Phoenix for 150 grand back in 2012. Now that same house is worth 451, 450, 460. Goodness gracious. And so it peaked at over 500 grand. So if you were at 500 grand, you paid 500 grand for a house, let's say in Phoenix, now 460. That's a lot of, that's a lot of equity loss. San Francisco's next. From May 2022 peak, down 9.2%. Month over month, up 0.7. Year over year, down 1.2%. Since 2000, 296%. 296. 296%. Like in Ohio, I see numbers at like in the mid 100s as far as price appreciation over the last 20 years. Off the top of my head, I think that's where they are. San Francisco, nearly 300%. The year-over-year price change flipped to negative from 0.5% in March and 2.4% in February. So they were up year-over-year in March and February. The MSA includes San Francisco, Oakland, much of the East Bay, much of the North Bay, and goes south the peninsula into Silicon Valley through San Mateo County. Probably includes San Jose, I'm guessing, as well. Kind of that 5. Is it 5? Yeah, I guess it'd be the 5 corridor, right? Is it the 5? I can't remember what goes through Silicon Valley there. San Francisco MSA home prices. Look at this. So you could buy a home $650,000, $675,000 at the peak of the housing bubble 1. That's a deal now. That's like you take 2 of them. I'll take 2, please. Utah, 2. Bring back 2. 2 of them. 2 houses. Huh. Then it dropped all the way to 450 grand. Then just went up, right? I mean, it went up at a a rapid pace, but then spiked. I mean, look at the spike here from like 2022, or no, I guess it'd be in the early 21, all the way up to 2022. It spiked straight up in the air to approach 1.3 million, 1.28, something like that. Who's counting at that amount? Then it went down, and now it's been going back up. So it has been going back up, but not like it was. And I don't know that it will unless interest rates come down or everything crashes and it just goes up again. And we'll be together on YouTube or whatever platform in another 15 years saying, I can't believe San Francisco homes are now $3 million. I would have bought one at 1.3. Crazy. San Antonio MSA, from the peak down 9.1, month over month, 0.4% up. Strange how some of these MSAs, some of these cities are actually up month over month. Year over year down 3.2. Since 2000 up 146. Not that bad in San Antonio. So they're not even saying there was a housing bubble in San Antonio, like the first one back in the GFC. That's the thing. I think if you are hoping, wishing, and wanting a housing market crash, because a lot of y'all are, and I get it, even if you're not going to buy a house, I think there are two people out there waiting for a housing market crash. One person wants to buy a house, and they're like, I really want to buy, I just can't afford anything. And then there's another person who has no intention on buying. They just want to see the demise and the debacle, right? They're the person that's like, just wants to see everybody lose for some reason, which is fine. I mean, people have their own intent, you know, their own motives, and this is all just entertainment, right? At the end of the day. But it's important to know, if you're hoping for a crash, that it's not like not every market was a complete catastrophe in the GFC. I mean, look at San Antonio. It went from like 150 to 140, right around there. Maybe 135. Not that bad. But now they're in housing bubble number 2. He should have called it housing bubble 1, because there was no first housing bubble, according to Wolf Richter. It's got a cool name too. So Denver, here we go with Denver. From the peak, down 7.3, month over month up 0.6, year over year down 1.8. Since 2000 up 212%. Again, another metro with no housing bubble number 1, no GFC housing bubble. Before I got into real estate and before I became a housing nerd and really looked at data, I was under the impression that every market was like a bloodbath during the GFC. Every market went down 50, 60, 70, 80%. Not the case. Though Denver did go down more than San Antonio, right? You're up 250, 260 or so, call it 260, and then right at 230. So like 30, 40 grand it went down. I mean, you still lost equity, but it wasn't like some other ones that we'll look at, like Phoenix. That went down a ton. So did San Francisco. And now they went up to, they peaked recently at 625 or 675, I guess, and now down to right underneath 600 grand. So again, that's a lot of equity loss. Dallas Fort Worth down 6.7 month over month, up 0.3 year over year, down 3% since 2000, up 191. The year over year drop worsened from down 2.4 in March and 1.4%. So it's accelerating as far as the decline goes year over year, but month over month they're actually up. Dallas Fort Worth, same thing. No first housing market bubble. Didn't happen. I mean, prices went down, but not really a severe bubble. Now they say they're in one. Homes peaked over 400 grand recently. Sacramento, month over month, 0.5%, year over year, down 0.6. Since 2000, up 245. The year over year price change flipped to negative from April, from 0.1% in March and 1.3% in February. Sacramento home prices, look at this. So look at Sacramento and then look at Denver or Dallas, right? Like, look at the difference in the charts. This chart that's like this, whoop, straight up and then straight down. It peaked over 450 grand, then went all the way down nearly to $200,000. That's a drop, folks. Like that's probably what you're wanting. Like somebody just commented on here and said prices need to go down 50%. Well, that's your drop right there. So I guess depending on where you live, that's what you're looking for, right? But this bubble is bigger, no doubt. But this bubble was pretty bad. I lived in California. I was actually out there during the GFC. I didn't own a home. I almost bought one. Thank goodness I didn't. Wife talked me out of it. We'd have gotten creamed. Creamed. So glad we didn't. But a lot of my buddies did. Tampa, kind of a different end of the country. Down 6.2 month over month, up 0% year over year, down 5% since 2000, 261%. Look at that. Look at the first housing bubble. Up to 240 grand, then all the way down to 120 grand. Now it's gone all the way up to just over 380 and kind of gone sideways. But now it definitely is going down again. I mean, the drop now is becoming substantial. They were like at 390. Now they're at, what's that, 360. So 30 grand in the last year. So they're in a housing bubble, they're saying. Portland. From May 2022 peak down 5.4 month over month. 0.7 year over year. 0.1. Down 0.1 since 2000, up 219%. It's just crazy, right? Prices are back where they first been in early 2022 in Portland. Yeah, in early 2022, but they didn't end there. They ended a lot higher than that. Housing bust 1, not as bad as Sacramento, but definitely a housing bust. They were like at 325 back in 2008, and then down to 225 in 2012. So, I mean, a lot of people think 2008 housing crisis, but really the prices didn't bottom out till 2012 in many markets. In many markets. And it's good if you're on this channel right now. It means, you know, it's a Tuesday night and you're actually spending time with us looking at the housing market. You must care about the housing market somewhat. Good for you, because I remember I actually bought a home in 2012, I think, 2013. I had zero idea about the housing market. Like I didn't know anything about it at all. I got a discount. I negotiated a discount, and I was only I think I only paid 160 grand for the house in Columbus. Fairly new house, and a small house, but I didn't know anything about the housing market. Otherwise, depending on what was happening in Columbus, though Columbus only went down 11%, I think, during the GFC, I could have probably negotiated a better deal. So it's good for you if you're on here paying attention to the housing market and you're maybe looking for a house at some point in your life. Honolulu. The year-over-year decline worsened from negative 0.8 in March when it had flipped to negative from positive 0.6 in February. From June 2022 peak, down 5.1%, month over month up 0.2%, year over year down 1.6%. Since 2000, 279% increase. Honolulu, housing bubble 1. Is that a housing bubble? I guess it is. It went up to 525, then dropped down to 425. And now it's it peaked at 900. Wow, $900,000. That's nuts. And then down, it's kind of gone sideways since then. I mean, it went down, but then sideways since like 2023, I guess. Salt Lake. Somebody asked about Salt Lake. Here you go. Salt Lake from July 2022 peak down 4.4%. Month over month up 0.7. Year over year up 1.7. Since 2000, 218%. The year over year gain declined from positive 2% in March. This is where Columbus is, by the way. So if you're tuning in from Ohio, know that Cincinnati and Cleveland are faring much better when it comes to inventory levels. Like when I say faring better, they don't have the rise in inventory that Columbus has. And Columbus prices are starting to become flat as far as the year-over-year growth. Thank goodness we need it. We need prices to come back to reality here because they're nuts. They priced a ton of people out. But Salt Lake City, they're calling housing bubble 1 2025. I'm sorry, 25. $275,000 approximately where it peaked. Wow, that's cheap, right? And then it bottomed out in like 2012 at like 190. So by the way, like if you're seeing rapid rises in inventory where you want to buy, rapid rises in inventory, it probably means prices will soften or maybe even correct or severely correct or crash depending on how much inventory is there. That's really the key. You got to have inventory. But one of the things you should probably pay attention to as well, and this is like plain as day when you look at these charts, is like no matter where you bought in this period of time, like if you'd have bought in 2003, 4, 5, 2007, 8, 2009, 2010, 2011, 12, or 13, or even 14, 15, or 16, you're still up a ton. So it's like when you expand the time horizon, the ups and downs become a lot less severe. If you bought during the GFC at all, even when prices had peaked in 2008, you would be up a ton right now. I mean, that's what I'm seeing in the chart. In other words, there's a lot of these markets where if you have a realistic timeline, like a long horizon, a downward trend isn't going to slaughter you necessarily, unless you're like trying to sell it for profit immediately. Seattle MSA, what's happening in Seattle? Down 4%. Year-over-year gain decline positive 2.4 and declined from up 2.4 in March and 4.3 in February. So month over month they're up, and year over year Seattle's still up. Since 2000, market is up 242%. Look at the housing market bubble, the bubble 1. 425 down to 275. And now peaked at 800 grand. Now they're kind of heading around 775. So Seattle's one of those markets that's not down year over year. It's just that growth is shrinking. That's why it's on here. Raleigh, down 1.4% right now, year over year. Since 2000, up 157%. They're calling this housing market bubble 1. I don't know, it's not that severe of a drop, but I wonder what they define as a bubble. But 230%, I'm sorry, $230,000. And then down in 2012, they're right under 200 grand, all the way up to 470 grand. Houston didn't have a housing bubble, the first housing bubble. It wasn't in Houston. Pretty interesting, right? But now they say they're in a housing bubble. Houston's down 1.4% from the peak, down 3.4%. And they've got a ton of construction, ton of new construction, a ton of inventory growth, and a ton of migration. Nashville. Everybody loves Nashville, man. I don't know where you live in the country, but if you're from like Ohio, people love Nashville. They love it. Gotta go to Nashville. Down 2.7% from the peak, month over month, 0.7% up, year over year, 0.4% up, 219% growth since 2000. Housing bubble 1, they hit a whopping $200,000 in Nashville, all the way down to 175. Then they recently peaked right over 450 grand. Las Vegas, down 2.1% from the peak, month over month, up 0.4, year over year, up 2.5. Since 2000, 180 grand. Wow, look at that housing bubble. That's what I'm saying. Like, we've looked at a lot of these major metros, and many of them, don't look anything like Las Vegas. I mean, look at that bubble where it approached 300 and what's that? Call it 330, 340 back in 2006, and then dropped off the planet down to 125 grand. It could have gone lower than that. I guess the chart's not showing it, but I mean, that's a crash. That's a crash and burn. And then it went up all the way to 450, then dropped severely in 2023 or 2022. Probably, yeah, in end of 2022 is when it dropped, when interest rates spiked a lot. Minneapolis, from the peak down 1.5 month over month, up 1%, year over year up 1.2 since 2000, 159%. Minneapolis MSA housing bubble 1, $270,000 approximately, all the way down to 180 grand. And then, like, you can really see the seasonality. Look at that. Just whoop, 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 up and down, all the way to right over $380,000. And then bounced around, kind of going sideways now. Atlanta, from July 2022, down 1.1 month over month, up 0.4 year over year, down 2.3. Since 2000, up 159%. Remember, that includes, I keep saying this, but that includes the GFC, like the 159% growth for Atlanta includes this downturn right here. You're still up 159%. Yeah, crazy. Right over $200,000 was the peak. Then down to 125 grand approximately. Then all the way up to nearly 400 grand. Then it went down, but like they said, it's actually, it's down year over year. But it's barely down from the peak. Like, here's the peak here, and there we are now. So barely down, just 1.1%. So one of the things you should probably, I would assume then, you pick up from this, if you really want to buy a house or invest in real estate, like, when prices come down, buy something. When prices come down, I mean, do you want to be here in another 15 years going, oh, I should have bought in the housing bubble too? I don't know. Timing the bottom of the market's tough, but once prices come down enough where it makes sense for you and you can comfortably afford it, even if getting a job at McDonald's, you can still afford the home payment, and you've got a slush fund, and you've got a slush fund backing up that slush fund, and you prepare yourself for all the taxes, the maintenance, the insurance, right? All that stuff. And the cost of owning a home, once you prepare for all that, when prices come down enough, take advantage of the market. Don't just sit on your hands and go, I just want it to come down a little bit more. It's like, okay, you can. Nothing wrong with that. But at some point, you got to do something, right? Orlando, from June, down 1%, month over month, up 0.1, year over year, down 2.7. Since 2000, 231%. The biggest so far has been San Francisco, up nearly, we can call it 300%. It was like 297 increase in home prices since the year 2000, even with the massive decline they had. Orlando home prices, what did they do in the bubble? This bubble was 270 down to 120, all the way up to 400, then a little sideways. All right, now we get to 14 metros that are higher than mid-2022. I'm just going to buzz through these. Then I'll look at some comments. Miami, they had a housing bubble bust 1 right here, but then they went up. The weird thing is, oh my gosh, look at this. Since 2000, Miami's up 324%. The weird thing is they're not up from the peak. Well, they peaked actually in 2024. So since 2022, they're actually up. But they're not up from 2024. So that was a little weird. But 324% growth. San Diego, Month over month, up 0.3%. Year over year, down 0.9%. Housing bust one in San Diego. At the peak of the first housing bubble in the GFC, you could buy a house at 550 grand. Then it dropped all the way to $350,000 in San Diego, 350 grand. Now you're $950,000. Wow. Charlotte, since 2000, up 170. How much was San Diego? Wow. San Diego's up 335% since 2000. Charlotte, up 170% since 2000. Year over year, down 0.6. The housing bubble one, was that a housing bubble? Not compared to Vegas and San Francisco, right? 180 grand, approximately 185 grand was the peak in the housing bubble, down to 140 or so, then all the way up to 380. But now they're actually up since the peak. They don't actually tell us how much they're up since the peak. This is the difference between a realtor.com or a Zillow or a Redfin. They would tell you how much they're up from the peak. Wolf Street's like, not going to give you that info. We don't want to, we're not going to talk anything. We're not going to say anything about the housing market that is encouraging. So they're just kind of like, oh, well, we'll just kind of half mention it, which is fine. It's interesting to see their perspective. Los Angeles, month over month, up 0.5, year over year, up 1.2 since 2000, up 333%. Housing bust one, 620 grand down to 212,000 approximately. Oh, no, I'm sorry, 212. The year 2012, my fault. $350,000. Now all the way up to 900 grand. It's continued to go up. So Los Angeles is like, nope, no problem. Columbus, Ohio. Month over month, up 0.9. Year over year, 1.7. Since 2000, up 155%. The year over year increase shrank in Columbus, Ohio from positive 2.1 in March and 3.1% in February, now 1.7. So that growth is shrinking, like I said. Explosion of inventory. Did we have a housing bubble one? Not really. I mean, we were right over 160 grand. Then we dropped to like 135. That's it. That's all we dropped. So not every market fell apart during the GFC. Baltimore, they say, has a housing bust. Look at the Baltimore home price in 2003. Oh my goodness. It was like 180 grand, then went all the way up to 320, then down to right underneath 240. Now it's at near 400,000. They're up 1.9% year over year. Kansas City, no housing bust, number one, up 179%. Washington, D.C., a lot of people have their eyes on that. 460 grand during the first housing bubble, then down to 212, then all the way up to 575. Boston, look at that. Housing bust one. You could buy a house in Boston. Even at the peak of the GFC, you could pay $425 and have your house in Boston. Wow. Then all the way down to 325, now up over 700. Philly was at 250. Came down to 200 or so. Milwaukee up to 240 approximately, down to 180, then all the way up to 360. Chicago, somebody asked about or talked about Illinois and how crazy it is there. I mean, Chicago's up 3.4%. Look at this. Since 2000, Chicago's only up 115%. But they did have a housing bust, one. San Jose, 352%. Wow. That's big. So I guess San Fran doesn't include San Jose. Up to $1.7 million now. And at one point, it was down underneath 500 grand. Probably back then, people were like, I still not going to buy a house. It's not low enough. It's not 500 grand's not low enough. Now it's approaching $1.7 million. New York. What right underneath 500 grand during the first housing bubble. Then all the way down to the high 300s. Now it's up over 700. All right. So those are the charts from Wall Street. Let me take some comments. Then we're going to get to this next one. This is a doozy. This next article is a doozy. So just as we talk about home price decline, y'all are like, hey, home prices are crashing. I want them to crash. Realtor.com comes out and says, home prices are not on the verge of a nuclear crash. Economist projects modest price gains of 3% in 2025. And it was published by your friend at Realtor.com. All right. Before I make you freak out, let me check out some comments. Got 78 people on. Hit the like button. Don't be a freeloader. People will get burned. Some will. Yep, some will. Terrible if you're not selling and have to pay high property taxes and insurance. Terrible if you're not selling and have to pay high property taxes and insurance. Yeah, a lot of areas are dying with property taxes right now. Ohio may completely get rid of property taxes. We'll see. In the Bay Area, 20 minutes from San Francisco, California. Wow, that's a rough market. I mean, prices there are unhinged. Always have been. In Hilton Head, South Carolina, a friend bought a house for $1 million in 2019, sold for 2.4 in 2024. Wow, did he do any upgrades? That's nuts. Holy cow. Everybody loves Hilton Head, man. People from Ohio love Hilton Head. $600K for a house in Oakland is criminal. Yeah, that's a lot. How do you think Vegas will go? It'll go with inventory. Like if you're wondering how your city's going to do or how your neighborhood's going to do with home prices in the future, look at inventory. Find out how many homes are in the exact area that you live in or want to buy in or whatever, invest in. What's the inventory trend been like over the last, 5, 10, 15? Look at it and then look at the prices and go, all right, well, when inventory was high, were prices low or were they high? Probably if inventory was high, prices are probably going to be lower. Let me turn this off. See if that helps. Does that help? Is that better? It doesn't really matter, does it? I'm doing a late night tonight. Looking to buy in the Sacramento area, hoping for a strong pullback. Yeah, you could get it. You could get it. You could. You just got to watch that inventory and look what's happening with it. And it's not going to happen immediately, right? Like in Columbus, we had an increase of 56% year over year in homes for sale. Well, prices aren't coming down here yet, but eventually that'll work through the system. It takes a while. This is real estate purgatory. I guess it depends on what side of the spectrum you're on. If you're that cat in Hilton Head that sold for $2.4 million after buying it at $1 million, purgatory is looking pretty good. I clean pools here in Vegas. Oh, hey, John, what's up? I drive all over. I spoke to a customer who's a 20-year-old realtor. He's having to cut prices, says inventory is ramping up. Good. Yeah, that's a pretty good, you kind of have your ear to the ground. You know what's going on. That's like feet on the street. I like that. This is the Fed's fault. Well, the Fed did break the housing market by, making rates, giving everybody access to, cheap money. That did not help. That did not help. But really, I mean, I guess I understand why you say it's the Fed's fault, but it's also like, it's kind of like human nature, right? Like from a standpoint that all the people that bought and sold and made money and paid over asking, they got emotional and bought. And I think that's the way humans are. And I don't expect that to change. I know there are people out there like on YouTube that think that they're going to change consumer behavior. So far, that hasn't worked. People buy on payment. That rate gets lower, they'll buy on payment. Not because they should, but just because that's why buy now, pay later works so well. But the Fed did not help. $698 billion homes in the U.S. market for the first time ever. Yeah, yeah. I mean, that's obviously because it's obviously and thanks innovative, sustainable solutions. That's obviously because home values are so high, right? Yeah, I got one in 2010, so selling. You're going to sell now since you bought in 2010? Maybe you got to hang on to it. I'm just saying. I think I've talked more people out of selling than actually buying or selling, or actually, I've talked more people out of not selling their home than I have anything else in life, probably. I don't know. You probably paid next to nothing for it in 2010, right? Maybe not. I don't know. BAM Media. I want to buy a home, but my mortgage will be $3,100 a month. Just awful. Home sold in 2017 for $200K. Yeah. So probably the thing that a lot of people struggle with, tell me if you guys struggle with this. If I was looking for a home right now to buy, even as a realtor, even as a housing nerd, the thing that would be going through my brain is like, well, if I buy today, I'm sorry, if I buy when the market falls, like let's say in Columbus it falls 10%, and I'm like, wow, homes are lower than 10%, or lower by 10%. It's like, is that low enough for me? Do I hold out? Is it going to go back up after that? Right? That's probably what a lot of people struggle with. But if you have a long enough horizon and you're realistic that, hey, this isn't a flip, I'm just buying my home. I don't care what the Zestimate says next year. I mean, the Zestimate from Zillow has ruined probably more folks' mental health than anything on the planet. I think, going back to this comment here, you say it's the Fed's fault. I would say social media maybe more so to blame for the housing crisis, for the inflated housing prices, because people got FOMO so easily because it's right there on their phone. At least during the GFC, you just see it like in the newspaper, you hear about it word of mouth, but you're not opening up, maybe on MySpace right back then, but you're not opening up Instagram and going, hey, Bobby Sue bought a house bought a brand new house. Look how nice that is. I wish we had a new house, honey. So going back to this, whoops. Yeah. So I'm going to keep renting. Good for you. But going back to my point about, the fact that FOMO and social media, that'll mess your brain up big time. But if you don't pay attention to that and you're like, whatever Zestimate, I don't care. Just put your head down, do your work, pay your mortgage, make extra payments. Make sure you buy something you can afford, like easily afford. Not that's a stretch. And don't marry the house and date the rate. Marry the house and marry the rate. That's how you got to look at it. Like there's no chance to trade this girlfriend in. Like I've got to keep her. And then if it changes, well, then you can take advantage of it, right? Home doubled in price since 2017. Yeah. Oh, can you please look at Huntsville? I don't have that data in front of me. I'm not doing that tonight, BAM Media. But if you join me on my Redfin Live, probably Thursday or Friday, I'll dive into Huntsville. If you join us and ask me to review Huntsville, I will. Palm Springs, same thing. I just mentioned to BAM Media. Join us on Thursday or Friday, and I'll look at it. I don't have that data on this article from Wolf Street. I hope the market slows down. A lot of people do. Houses in southern New Hampshire are selling very quick. The Northeast is rough. Ashish, like it's rough. Like Northeast is tough. There's just no room to build. What time is it? 9:14. 9:14 on the East Coast. El Paso, Texas. Again, I can review these other markets you're asking for, guys. I'll review them on my Redfin Live. Look for it on Thursday or Friday. I'll do a Redfin Live, and you can join us and ask about those markets. Even if you miss it, put it in the comments, and then I'll get to it on the next Redfin Live. I'll do yours. Dan in the dirt, what's up? I'm seeing lots of price cuts, mass layoffs. I hope rates go to 10%. They may. The Fed's buying bonds again. Yeah, so look, I'll whatever side of the political spectrum you're on, you should know that the administration wants lower rates. They want lower rates. Have they mentioned wanting lower home prices? I haven't heard them mention that. I haven't heard them mention that at all. I have heard them say the Federal Reserve's a loser. You got to cut rates by, I think it was just 2 days ago. Trump came out and said, you got to cut rates by a whole percentage point. They want lower rates. They will, if it gets bad enough in the housing market, if it slows down enough or prices start to cave this much, they'll do anything they can to get that 10-year lower, to get mortgage rates lower. I mean, they've talked about installing a shadow Federal Reserve. How goofy is that? Like, you can't make that up. Like, if you went to Hollywood, given the fact that Hollywood has the worst movies in the world right now, and what they have for the past 5 years, with the exception of a couple, everything's horrible that you go, that comes out from Hollywood. You could go into the Hollywood studios and say, I've got the best idea for a movie, and tell them that you want to talk about a shadow Fed chair. And they'd say, that's the craziest thing I've ever heard. We can't write that. But that's the truth. And I think they want lower rates. You can't make this stuff up. They'll do anything they can. Shadow Fed, get rid of the Fed, take Fannie and Freddie public, and to manipulate rates. They are going to do everything they can to get interest rates lower. Because they all bought, all those folks, everybody tied to the administration, all of them want cheap debt because they want to buy more assets. That's what they want. And they know deep down inside, they're not stupid. They know if they buy, if they lower rates, they will end up with more inflation. They know that. So they're definitely going to buy bonds. What's up with the RS7? Massachusetts inventory is growing slowly. Bristol County May was up 419, up to 567. Almond with other counties. I don't know what that means, but inventory up a lot. That's good. I just bought my home last summer. Pretty bummed right now. I wouldn't be bummed. Don't be bummed. I mean, just sit tight. You know, pay your mortgage ahead of time, or, you know, make extra payments if you can. What's your opinion on the quality of new builds? So I haven't experienced this. I mean, personally, I've sold some new builds to clients. Like, I've helped them buy new builds. I haven't heard of any problems personally, like homes that I've actually looked at or helped people buy. But I've seen a lot of stuff on the internet about it. And I've heard others tell me that new homes are not put together well. What I would say is expect that you'll have repairs, even if it's new, and do multiple inspections. Don't do just one inspection, do multiple inspections, and ask them for inspection records from during construction. Like, inspect everything about the home. Read every document they give you about when the contract, you know, when it comes to earnest money or anything like that, so you can feel comfortable. But know that every home is going to have repairs when you buy it. Everything's going to have repairs. That's just how it is. You're a workhorse. Thanks for all the great info. Wow, thanks, Jay Gorgonzola. That made me feel good. Good compliment. Nope, not one time Trump or Scott Turner, not one peep. Right, talking about lower home prices, I imagine, Dan? Right, they do not mention lower home prices. Like, Bill Pulte is in charge of the FHFA, right? I can never remember that acronym. Bill Pulte from Pulte Builders. Do you think for a second that his family, when they get together for Thanksgiving, are like, hey, I'm glad that you're in charge of affordable housing so the house prices can be lower? No. They're like, hey, what kind of deal can you work for us? They're human. Fed is not going to cut rates until we get a black swan event. Or he gets fired next year, or he leaves right in May of 2026. The new Fed will, if Trump has anything to do with it. I mean, he'll cut rates before he even gets into the position. He'll be like, have 1 foot into the office, into the Fed chair. Is there really a Fed chair he sits in? Before he even sits in the Fed chair, he'll be like, hey, Cut rates, we're going to cut rates 1,000 basis points. Well, we don't have that much room. Doesn't matter. Cut anyway. Huh. To buy $1 million house, you need $210,000 a year income and keep your high-paying job for only the next 30 years nonstop. To buy $2 million house, you need $420,000 a year and keep your high-paying job. Yeah. Yep. Unless you're somebody who already bought a $500,000 house in 2010, and then you sell your $500,000 house for $1.5 million and roll that equity into the new one. But other than that, you got to have your job. You got to have a job to pay your mortgage. It's crazy. Yes. Close your eyes and awaken. And that too, if the brave new world of AI bots coming in 2025 to 2035 to take away everybody's job. Yeah, a lot of people say that. I don't want to be a slave for a house for 30 years. Imagine losing a high-income job and trying to replace it. So many people overpaid. I mean, yeah, the worst thing you can do is buy. I've actually been in this situation. All transparency. Before I got into real estate, I bought a house that I wasn't a slave to the house, but as soon as I bought it and we moved in, I thought this was not for us. Way too big. We didn't overpay for the house. We actually made money on it, but I buyer regret, buyer remorse is not fun with a house. So it's not a decision to be taken lightly. Scott Turner is the head of HUD now. Right. Love the late stream. Thanks for the great info. Jordan Lang, what's up? Oh, you're welcome. Yeah, sometimes I'll jump on here late. Sometimes I do in the morning. But just want to see who else would come on this evening. Give another audience a chance. Working on closing a deal in Sandusky, Ohio. Congratulations, Zane. Offer accepted by sellers. Just going to keep my head in the sand about the crash and falling rates. Well, I mean, so Zane, I did an update on Ohio. It's with the editor right now. And I'll put that, I have an Ohio only YouTube channel, Ohio Housing Nerd. It only has one video on it, but I'll add more videos. But I did an analysis county by county, and I talked about Sandusky County. And I think inventory's down there. I don't think it's up. So right now, I think prices there are okay. Did you get that seller financing deal? Is that what you were working on? If you did, great, good job for you. 1 million mortgage, 7% mortgage rate, $70,000 interest year to be paid. Income needed 3x, so $210,000 a year for 30 years. Yeah. Yeah, you gotta make a lot of money to buy a $1 million house. True, the new Fed chair would. Right. Yeah, Jerome Powell's like, I'm not going to lower rates. But the next guy will. They said it's going to be Scott Bessent. They said that's probably who's going to, he's like in the running, what I read on Yahoo today. Can you get to the bubble part? Well, I did at the beginning, kind of. I mean, that's what I talked about at the beginning. In 1992, Scott Bessent, working for George Soros and Soros Fund Management, played a key role in the famous Black Wednesday trade against the British pound. You bet your ass they know tricks to get the interest rate down. They certainly do. Okay, let me get to this Realtor.com article. But thanks for all the interaction. You guys are great comments. National Association of Realtors chief economist Lawrence Yun said that he believes home sales will pick up in the second half of the year and that the national median home prices will grow 3% in 2025. Wow, I can't believe he said that, like, with all the data we have. By the way, I predicted they would go up 2.5% this year. And that was at the end of last year. So I'm probably going to be wrong. But given the data we have now, I would have never said that now. But this guy's like, nah, it'll be okay. Speaking at the Realtors legislative meetings in Washington, D.C. on Tuesday, Yoon argued that overall prices will continue to grow modestly despite weak sales in the first half of the year and an uptick in seller price reductions. Home prices are not on the verge of a nuclear crash, said Yoon, pointing to low levels of serious mortgage delinquencies as a sign that few homeowners will be forced into distressed sales. That's Now, I agree with him on this distressed sale thing. We're not seeing a massive rise in new listings overall. We're not. And so because of that, I think you're not seeing a lot of distress. Like the distress in the home market shows up in new listings. That's where it shows up first. And we're not seeing it. Even Travis at Real Estate Mindset admitted that on the last video he did. He was like, we're not seeing distress in the housing market yet. Melody Wright, on the other hand, always thinks there's distress in the housing market. She may want to crash worse than Wolf Richter. She may be, in fact, Wolf Richter, a wolf in sheep's clothing. She may be Wolf Richter, and I don't even know it. Like, she definitely wants a crash. You can see it in her eyes. She wants it so bad she can taste it. I mean, she thinks there's distress selling, but Travis at Real Estate Mindset said on his last video, not seeing distress yet. I was impressed. I was like, he admits it, not seeing distress yet. Because the new listings are only up like 6% year over year. His forecast, I keep messing this up. His forecast hinges on mortgage rates easing to 6.4% by the end of the year, alongside continued labor market growth with 1.6 million jobs added to the economy across 2025. 6.4% is possible, but I don't know. Could be higher. Existing home sales. He thinks they're going to be up 6%. The existing home sales. New home sales up 10%. Median home price up 3%. Mortgage rate 6.4. Job gains 1.6. Look at 2026. Realtor.com saying, or National Association of Realtors, is saying they're going to be up 11% next year. Home sales. Existing. New home sales up 5%, not as much. That's weird. Median home price up 4% next year. Mortgage rate 6.1. Jeez. So far this year, mortgage rates have remained in a narrow range above 6.6. The mortgage rate is a magic bullet, and we're just waiting and waiting as to when that could come down. Still, Yoon acknowledged that his exception for a recovery to home sales volume for the first half of 2025 has not come to fruition. Expectation, sorry, for a recovery in home sales. Okay, no, it hasn't. Sales of newly built homes were down 2.3% in the first quarter compared with last year, although they did make up an unexpected surge in April, jumping 3.3% on the year. Existing home sales have also remained stuck near or below the sluggish pace of last year, which is the slowest year for home sales in nearly 30 years. April's annual existing home sales pace of 4 million was down 2% from a year earlier, according to NAR data. The forecast that's most important is not panning out. I thought at this conference I would share some good news with you. Home sales are rising. Momentum is building. Okay. But we are not seeing that, said Yoon. The market remains very, very difficult at the moment. Oh, I thought at the conference I would say this. I get it. He's not saying that. He's saying we're not seeing momentum building. Okay, so there's some hope for him. The recovery has been delayed. The recovery has been delayed. Realtor.com chief economist Daniel Hale also spoke at the event, where she highlighted recent search estimating that the nation has a housing shortage of nearly 4 million homes. I'm not even going to go into that. If we want to continue to make home ownership available, especially for younger generations, we need to build more homes. Hale also addressed the issue of elevated mortgage rates and highlighted a recent Realtor.com analysis that found that rates for buyers of newly built homes are about 0.5 point lower on average due to builder incentives. She also noted a study last year that identified steps mortgage borrowers can take to secure a lower interest rate. Her advice: shop around for a mortgage. You can save almost an entire percentage point on your mortgage. That's the article, folks, from Realtor.com. So tell me what you think about that. So again, and you may know this, you may not, but the largest lobbying group, period, by a long shot, is the NAR. Like the biggest contributor to lobbying in the country is NAR. It completely beats out the pharmaceutical business. Like, it's not even close. It's like they're like a distant second. So the point of that is it's like these folks are going after lower rates. They didn't mention anything about prices coming down. Maybe that helps out people. They're like, nope, rates. It's all hinges on rates. Buy now, pay later, right? What's the price of the house? $1 million? If rates are low enough, my payment's low enough, I'll buy it. That's why so many people are in trouble with cars. Because they're like, hey, I mean, the classic story is the guy walks into the dealership and says, I need a car for $400 a month. What do you got for me? And then he buys on that $400 a month, even if it's 82 months or 100 months or whatever. Anyway, this article I thought was nuts. Not nuts, just like they are who we thought they were, right? Completely different than the Wolf Richter article. What? Elon Musk got in a fist fight with the SEC. Did he really? That'd be crazy. Rent. You know what, Tam? Like, I am doing a video coming up in the next, I'm actually going to shoot it tomorrow in Columbus about build for rent and what's happening with build for rent communities. But the prices on these build for rent communities are not, they're not horrible. Like there was I was going to show it to you, but it took me a minute to find it. I don't want to bore you guys. But build for rent, like it was a brand new house, single family house with a little yard, 760 square feet, not big, 1 bedroom, 1 bath, but the rent was like $1,500 a month. I mean, to your point, renting is not a bad thing. Sometimes I wish I would rent. I'm having gutters installed on my house tomorrow. I mean, gutters don't really improve the value of your home, but I needed new gutters. I've been saving for new gutters. I've been like, I can't wait to get new gutters. A kitchen? Nah. Floors? Nah. Gutters. Got to have gutters. And you can't, if your gutters are not good, they're going to deteriorate your house and mess up your foundation. Well, it's like $4,500 for gutters. Sometimes I'm like, I wish we would rent. I wish we would. So I understand that. I mean, buying a house isn't all it's cracked up to be. Melody does. Yeah, she does. You're talking about like has like crash in her eyes. She's like, I can't wait for a crash. Her eyes get really big. And you're like, yeah. She'll never buy anything. She just wants to see demise. Financing through the bank at 6.75%. Private seller deal, not seller financing. Okay, Zane, got it. Good for you, man. I hope you get it. I hope you get it. I hope you get the deal you want. Bye-bye, California. You leaving? Okay. I left. Not to mention property taxes and homeowners insurance. It's ridiculous. I can tell you property taxes are no joke. Insurance is no joke. And it's no joke even for investors. As an investor, I can tell you, you can get really, really whacked for insurance and taxes. Amazing. Interest rates are going to go back to zero, but there will be no recession, so home prices will skyrocket, and you'll make 50% more money so you can afford one, but there won't be inflation. So you can afford one, but there won't be inflation. Oh, yeah. Inflation is going to be insane. You'll need like a house in Ohio will be like $500,000 median price, right? Is that what you're saying? Yeah. Yeah, that's my biggest fear. Even in real estate, even in being in real estate, I mean, I own properties. That's what I do. I'm an investor. So I have rentals, right? Small, not single family houses, duplexes and triplexes. It's kind of my niche. And do I want to see them go up in value? Sure. Do I want to be able to pull all the equity out at, low rates in order to buy more property or fix them up or recoup capital? Sure. But in reality, I know that's not good for the overall economy. And so my wish is that interest rates stay where they are, and prices, if they have to come down, they come down. Oh well. And then the wages catch up eventually and people can afford homes. I want the person, the first time buyer in Ohio, I want to be able to help them find a home without struggling to find a home. That was like that before before COVID. I would help somebody. I was just talking to somebody this past weekend who I helped buy a home. First time home buyer, single dude, helped him find a home that he could afford. And he bought one. And now that house is probably worth, 50% more, and he would never be able to buy it. So I want that again. I want to be able to help people do that. And by the way, if the market, if it takes off again, is that good for realtors? I don't know. It was not fun during that crazy time. They were witnesses. That's how Musk got the black eye. Oh, really? That's how he got the black eye? That's hilarious. I thought maybe a girl hit him or something. Maybe he bumped his head on a Tesla. I don't know. Upvote, guys. He deserves more viewers. Oh, well, thank you. I appreciate it. I had a video really pop off, actually, Tech Ninja. That tax video I did had 100,000 views. I couldn't believe it. I never thought I'd have 100,000 views on a video. But I do put a lot of time into this, as you can tell. I wish first-time homebuyer loans focus more on lowering the rate than lowering the down payment. USDA has a first-time farm buyer loan that gives crazy low rate, but it has to be for a farm. Yeah. Yeah, USDA is a good loan. But you're right. That's interesting. Yeah, lower rate versus a lower down payment. Because a lot of people buy with no money down on those FHA USDA loans. They don't have any skin in the game. Chris, what do you think happens to red states when the economy sucks? Chris, I don't know. I'm not Chris. I don't know. Steve, California would be better on their own, actually. Young people can put nose to grindstone and save a good down payment, but we do not make enough to afford payments on high interest. Huh. Good point. He tackled Bissett? Is that right? Did he really? I don't know if he did. I haven't heard that. I don't know, pay attention enough there. I just kind of look at the financial stuff. I'll have to look that up. That's fascinating if it did. Wouldn't surprise me. Wouldn't surprise me they got into a brawl. I mean, the spectacle at the Oval Office, like with Musk standing there with Trump and that whole thing, like I'm not. And then before that it was Kid Rock standing there. You're just like, what is this? What's going on? It's hilarious. It's all BS. It probably is. Who knows? All right. Well, it's late, guys. I got to get to bed at some point because I got to get up in the morning and do this again. But you've been great. Thanks for hanging out with me. Thanks for talking real estate. Maybe I'll do more of these late night things. Comment. Let me know if you want me to do more late night things. Subscribe to the Housing Nerd. Share my videos. Like Tech Ninja said, I don't know. You said it somewhere. I deserve more run. I think that's what you kind of said, right? That's great. I appreciate it, Tech Ninja. And yeah, so this week I'll do a Redfin Live. That'll be Thursday, Friday. I've got a video coming out on build to rent. I've got a couple Ohio videos coming out, so look for that on the Ohio Housing Nerd channel. And you guys are great to hang out with. Seriously, like I could spend a lot longer on here, but at some point I got to get on with my evening. I'm sure you do too. So thanks for your time. Have a great night. I'm the Housing Nerd, and I'm out. OUT, out from Ohio.